it'll be possible to take an image of a check on your iPhone or using some scanning technology and pay that into your bank, and it will clear much more quickly than it does today.
Hello and welcome. My name is Brian Caplen, editor of The Banker, presenting a masterclass on the changing dynamics and landscape of payments together with Lloyds Bank. I'm joined by Mark Curran, who is Payment Technical Services Director for Lloyds. Now, Mark, the payments business is in the midst of massive change at the moment. I mean, what are the big challenges ahead for actors in that field?
Well, Brian, I think we're seeing three things happening, actually. So we're seeing consumers and companies looking for faster, reliable, almost instant transactions. We're seeing new agitators into the market, people like Apple and Google coming along and trying to offer something new. And we're also seeing the banks offering new technologies through their apps and their kind of web capabilities that we never saw in the past. And as a result, we're seeing all the different payment types become much more challenged by companies, businesses and customers who want to use them day in, day out, and they want them to be almost instant.
Okay, well, there's obviously a lot of innovation going on, a lot of new players involved, but for the banks, a lot of the challenge is with regulation, isn't it? So how are we looking on the regulatory landscape at the moment?
Well, I think that's the big challenge. We've got on one side all of these innovators, agitators and customers looking for new developments. On the other side, we've got regulation coming along and kind of really eating into development spend in both the banks and the technology providers. So you've got SEPA in Europe coming to the end of its rollout of the credit transfer and the direct debit, but now starting to look at instant payments. We've got in the UK the new payment systems regulator, who are there to create competition in the payments marketplace and also to bring the needs of those customers to the fore and work hard with the banks. And the third thing we've got is, of course, PSD2 coming along, which is just going through the final legislative processes in Europe. And that will bring new players to the market, it'll open up the market, but it'll also bring a lot more certainty to the market and payments going forward.
Okay, let's concentrate a bit on PSD2 because that is the new development. So when you say it's going to bring new players to the market, I mean, explain how that is possible.
So part of the legislation of PSD2 introduces the concept of third-party providers. And what that effectively means is that traditionally the banks have run and owned the payment systems. What this legislation means is that a registered third-party provider sending a payment instruction to a bank has to be treated as if that transaction came from the customer. So the risk is that those TPPs might disintermediate banks from their individual customers. But the alternative also that will provide opportunities for banks to become third-party providers and provide more payment systems and services to their customers across a wider range of financial institutions. So I think it's both a threat and an opportunity, but nonetheless a massive development for the next 2 or 3 years.
Okay, so at Lloyds, I mean, if you see it as an opportunity, I mean, how are you responding to that opportunity there?
Well, across the spectrum, not just in PSD2, looking across the wider market, the UK is also developing digital checks. We're moving to polymer banknotes and accommodating PSD2. We always sit down and look at those developments as kind of, well, what's the minimum we need to do to comply with the regulation? What's the maximum we can do for our clients and customers to help support what they're trying to do going forward? And how do we play in the marketplace? And we are doing that in these cases. It's very early days in PSD2, but we do have that future-looking advantageous view more so than just complying with the minimum standards.
Okay, so talk to us a bit more about digital checks and polymer banknotes. I mean, these sound quite interesting developments. I mean, we thought the check was going to disappear, but actually it hasn't.
Well, it hasn't, and kind of driven by the government, really, so another part of regulation. But in the next few years, certainly by 2017, it'll be possible to take an image of a check on your iPhone or using some scanning technology and pay that into your bank, and it will clear much more quickly than it does today. So a massive step forward for the check, but it also means we're not driving checks around the country every night, which we do today. We physically move every check back to the central point. And the polymer banknotes, again, moving. Bank of England announced in 2016, in June, they will move the new £5 note to polymer. It'll also be smaller, it'll be the same size as the euro note. And all the banks who print their own, the Bank of Scotland, Clydesdale and Royal Bank, are also moving to a smaller 5 at that point, and then we'll roll through. But the polymer note has advantages in that you can put it in the washing machine, you can drop it in there, you can go swimming with it, it'll come out, it'll be absolutely usable afterwards. So, but again, massive developments. We've got to amend every ATM to be able to dispense these polymer and the old cotton banknotes simultaneously.
Okay, well, let's just finish off on SEPA. I know you said it had kind of almost finished its life, but I mean, are we in a position now to kind of gauge its impact?
I think we can start to gauge its impact, and I think if we look at it really honestly, and even in Europe they would admit this, actually the SEPA experiment has been good in that it opens up all those countries to one payment type and one standard. But actually the number of cross-border, in other words from France to Germany, euro transactions is very, very small. I think the next step for them, this move to instant payments, replicating the UK faster payments in Europe, I think it'll be more difficult than I think it is, having built faster payments. But I think it is. So SEPA will come to the end of its initial phase, and they'll move straight on to instant payments, and that's where I think we'll start to see an advantage. And I think that's where we could see faster payments and a Euro instant scheme in some years to come joined up into one, so that you can instantly move money anywhere in Europe.
Okay, and this is moving towards this sort of ideal of globalized money moving freely across borders without huge charges.
Yeah, and SEPA, PSD1 did a lot around charges and certainty. PSD2, come back to that for a second, is more than just third-party providers. It also covers one leg in and one leg out transactions, so it brings certainty for those transactions you have today in Europe, but it will move them to transactions that start and end in the Eurozone, which is almost every transaction for a European company. So I think we will see across the globe more certainty, more pricing, and more customer benefit from all the developments.
Mark, thanks very much for that update.
Welcome.